What's up, truckers? Tricky Mick here, and today we have another bank going under, this time due to exposure to the trucking industry. Iowa bank failure tied to bad trucking loans. Craig Fuller, CEO at FreightWaves. As everyone in and associated with the trucking industry knows, most of the last 2 years have been very difficult ones for the industry. Trucking companies large and small have gone out of business. There are too many trucks chasing too little freight. Rates on most lanes are at or below 2019 levels. Another bad year for the industry. So don't believe it when they say that there is a shortage in the trucking industry. That is completely false, and there's plenty of data to prove that. In addition, brokerages have also been hurt. As widely reported by FreightWaves and other media, Convoy, a very high-profile brokerage, recently shut down for financial reasons. Other brokerages have also gone out of business, and layoffs have become relatively commonplace. There are hiring freezes and other belt-tightening moves in effect throughout the freight industry. Citzens Bank goes under. Now the trucking bloodbath has taken down a bank. Citzens Bank of Sac City, Iowa has failed, and it appears that its exposure to commercial trucking is the cause. Citzens Bank was a small state charter bank. Its loan portfolio was focused on commercial and industrial loans, according to BankReg blog. The blog reported on November 3rd that the Federal Deposit Insurance Corporation, FDIC, announced that Citzens Bank, a $66 million asset non-member bank, had failed. Supervised by the FDIC and the Iowa Department of Insurance and Financial Services, all of the deposits of Citzens Bank were assumed by Iowa Trust and Savings Bank, the blog reported. Citzens Bank was a state charter bank that was closed by the Iowa Division of Banking on November 3rd, and the FDIC was then appointed receiver. At the time of Citzens Bank's closure, the FDIC estimated that the bank had losses of $14.8 million due to the bad loans. And this is something that's happening across the industry in different ways. To protect depositors, the FDIC entered into a purchase and assumption agreement with Iowa Trust and Savings Bank of Emmitsburg, Iowa. Iowa Trust and Savings assumed all the deposits and substantially all the assets of Citzens Bank, but not the bad loans. Bad trucking industry loans. The superintendent of the Iowa Division of Banking, IDOB, which is part of the department, also issued a statement, according to the blog, saying that in the course of a joint FDIC-IDOB examination, examiners identified significant loan losses that had not previously been identified by the bank, which raises a lot of red flags. Why didn't the bank have those identified by themselves? It's a very odd situation, if you ask me. In addition, the superintendent's statement included information that Citzens Bank's loan portfolio was concentrated in out-of-territory and out-of-state loans to one industry. The blog noted that some of those loans had incurred heavy losses. In the statement, the industry in question was not identified. However, prior to the failure of Citzens Bank, the FDIC and IDOB entered into a consent order with it in August, the blog reported. As part of the consent order, according to the BankReg blog, Citzens Bank was required to engage in an independent third-party loan consultant with requisite knowledge, skills, ability, and workout experience. Additionally, the consent order focused on one loan portfolio, the blog reported. The consultant had full authority and discretion to administer and service the bank's commercial trucking loan portfolio. Sac City's population is just over 2,000 people. The population of Iowa is only about 3.2 million people. Citzens Bank's assets were only $66 million. Prices for new Class 8 trucks in 2023 vary by brand, as well as by the number and type of features and equipment. However, they are expensive. Prices range between $150,000 for basic models to over $220,000 for models with custom features. Now, this doesn't even take into account things that are like car haulers or modified special trucks, like utility contract trucks. There's tow trucks, all kinds of other trucks that'll get into the $300,000, $400,000 range. So we don't know if they're talking about those either, but there's a really, really wide range of prices and features that trucks can have. How or why a small state charter bank in the very small town of Sac City, Iowa, was making loans on expensive trucks is unknown, but doing so seems highly speculative. So let's take a look here at the rates real quick to explain exactly one of the main reasons so many of these loans are failing. So here you can see at DAT Freight and Analytics, the load board averages here for national spot rates. They've increased 9.5% recently, but they're still really, really bad. So if you look at dry van, we're looking at 209. If you look at flatbed, we're looking at 245. and at reefer we're looking at roughly $2.48. Now there's a lot of range in what fuel can cost, but let's say it's just $4 a gallon and you're getting 7 miles per gallon. Well, you're going to be paying almost 60 cents per mile. That's over 25% of your revenue gone immediately from dry van, and more like 20% for the other two. But now let's say that you're in a state like California where fuels hit $6-7 a gallon. Let's say $7 a gallon and you're getting 7 miles per gallon. Well, all of a sudden you're paying $1 per mile to run in those extraordinarily expensive states. I mean, that's 50% of your revenue gone for dry van, and around 80% for the other two. So this is one of the biggest issues that the trucking industry is having to overcome, is high fuel costs, not to mention the high payments for trucks. So if you ask me, we're going to be in for a very, very hard time here, as the trucking companies are going to consolidate into fewer trucking companies, but with more trucks and more drivers. So we've had a lot of people say that there's a trucking shortage, but that's not really true at all. We aren't short truckers like we've seen some of the websites posting and some of the bloggers post. What we're short on is wages, and what we're short on is good rates for truckers to be able to move those loads. If you were a trucking company owner, would you rather pack up and get into another industry, or keep bearing this out as you're bleeding away slowly and slowly and slowly? Because this doesn't even account to the drivers that are getting paid. What if these drivers are used to getting paid 88 cents a mile, plus your 50 cents a mile you're paying for fuel? Well, right there you're looking at 75% of the revenue gone from that truck. And is it really worth it to keep doing the business if you're just bleeding money left and right? This doesn't account for repairs, tires, small things like that. So in my opinion, this is going to be the first of many banks that have exposure to the trucking industry. But I would keep my eye out and pay attention to what's going on, because unless these spot rates start going up, we're going to see a lot more trucking companies fold, and I hope it's not yours. So tune in next time, and we'll talk about getting your fuel down, so hopefully your trucking company can outlast these terrible spot rates. Have a great day. Keep on rolling. I'm Tricky Mick.